All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. I hope you had a fantastic weekend. Extra long weekend here for the markets, as we tend to get every time or every year around this time. But not exactly an eventful weekend for the markets. Not a lot for the markets to really sink their teeth into. Some of the same old trade talk rhetoric. U.S. President Trump very positive in his tweets about what's going on and what's happening on that front. We saw the markets gap on down. A lot of that due to some of the weakness we saw in banks in Europe, really driven by the HSBC earnings. And you can see HSBC and the gap down here today. This has been one of the weaker banks around the world, and has really fallen on some tougher times, and still has some major headwinds here that it's facing as it goes forward. If we back HSBC out to a weekly chart, you can kind of see what it looks like. Made a kind of a monster move here 2016, 2017, and then it's had a year and a half of small type of pullback here with it. But today's earnings here for HSBC sending it lower, and so we see financials here in the U.S. all kicking off and being a little bit weaker, being kind of the semi-weak spot here today, but not in a bearish way, not in any sort of, wow, okay, bears are coming in, the sellers are really coming in, financials, they're ready to get toasted here, and we'll look a little bit closer here at some of the financial charts in just a moment, but that's helping to drive things, and then gold, copper, we're seeing, FCX in breakout mode, we're seeing BHP Billiton in breakout mode here, we're continuing to see this bullish theme that we've talked about in these kind of copper gold miners, really be solid. It was interesting this morning to see the U.S. dollar pretty much trading higher, yet gold, copper were trading on higher as well. Since the open, we have seen the U.S. dollar tick down just a little bit, but a very small move here in the U.S. dollar, very big move here in gold and in copper, here to the upside as they push into new highs here, and see some strong gains over the last couple days. And we did a whole video on gold a month and a half ago, and just talked. This is not going to be an easy trade. It's not going to be something that you just buy and it goes your way every day. It's probably going to be a choppy, most days you're in, not going to go anywhere for you type of thing. But by the time it's all said and done, it's going to have made a pretty sizable move, and that's what we see here with with gold, and how gold has emerged and how gold has traded here over the last several months. And I don't think the run is over. I think we're talking about something when it comes to gold where, the short-term charts, they're overbought, sure, right? But you can kind of see this, on the weekly chart. You can see this kind of cup and handle pattern emerging. It's not a, absolute cup and handle. Generally cup and handles have rounded bottoms. This has more of a V-shaped bottom. But, we are seeing some, fairly bullish activity. We're going to see a stall up here around 127, 128 most likely. I'd be surprised if we don't see some sort of stall, maybe even a little pullback before a breakout higher. But ultimately, I think when we look at the end of 2019, we're going to look at gold outperforming the market and outperforming the market in a sizable way, and in a way that we haven't seen in quite some time. And I don't think that's a end of the market, bull market type scenario and all of that. I think this has everything to do with the Fed here in the U.S. monetary policy, kind of changing here in the U.S. and some of the trade talks and some of the trade negotiation that's out there, and how that is affecting various currencies and will affect various currencies as we go forward here. So we continue to see gold push on higher, and then today copper participating, and copper's been a laggard. And here's the copper ETF. It's been this laggard here, kind of just chunking on the bottom, but in total breakout mode here, with copper, and something where it can be played with something like a BHP and FCX. Those are some of the traditional ways to look and to play it. We've talked about some of the different plays out there, like NGLOY, which is an OTC stock, but definitely benefiting by some of these trends. You can see some of the volumes that have come in on that, but some of the optionable types of trades where with it, the BHPs, the Rios, and they continue to march on higher. They continue to be overbought in a short-term standpoint and in total breakout mode in a longer-term standpoint, and seeing positives really continuing to emerge in both of these names. We're even seeing Vale that's had some hiccups, to say the least. They're snapping back a little bit, but this is going to be a laggard. It's going to be a laggard for the next 6 to 8 months, and a sizable laggard, in my opinion, due to what is going on there with the company, and some of the headwinds that it definitely is facing here in the future. Now, staying in this kind of materials area, take a look at Alcoa. This is something that I mentioned, gave a bearish breakdown right here, and I didn't go after and play it just because of everything else that was going on out there in the market and whatnot, but, a bearish breakdown to say the least, and then kind of had this, this mini rally snapback here on it, and, kind of weakened a little bit into last week. And, this is something where this 28 level is something I'm eyeing. If it breaks down below 28, I expect that, secondary sell leg to come back and retest the lows. And, we didn't see the lows be made on high volume, so the tendency is to at least go down and test those lows. I think there's a strong risk that it breaks those lows and breaks those lows in a big way. But this is a stock that is almost becoming uninvestable for investors, where they have to kind of look at the performance of the stock and just go, we can't touch this. We can't go anywhere near this. You can see the stock's gone from 60. It's been cut in half in the last 10 months. The value here has been cut in half, and we're starting to get down towards the pricing where it was when it kind of had its split, the Arconic Alcoa split, and to see it break down and to come back into this kind of $22 to $21 area, I think is a very, very strong potential here, and looking for that for an entry point. Don't quite have it here yet. But definitely one that has that potential here sooner than later. Another kind of more bearish type breakdown that I'm watching, and we talked about this last week, American Airlines. And American Airlines blew through the lows on Friday, blew through the lows of last week, and blew through them on volume. And this is after having a kind of a bearish engulfing candle last week, and then we get the breakdown. And, in this market here just yet, I'm not willing to chase downside. But, if they rally back on some pretty light volume, does that give me a better risk-reward entry point? And that's kind of what I'm looking for. And so, this is something where selling into a small rally higher will make sense. Now, what I'm looking for on it is my hourly chart, and right now with the hourly chart, you can see that it's moving above the 7-hour moving average. So I need to give it some time, let it trickle on or move on higher, and then that next breakdown below the 7-hour, that'll be my opportunity to go after, to get into American Airlines, and looking at that here, and this is something I think returns to that kind of $31-32 level, or it has a high risk of returning to that $31-32 level here with it. Now also this morning we had Walmart earnings, and you can see the reaction to the stock. It's very positive. This is a stock that ran up into earnings, gapping up here on earnings here today. If we come in and we just look at kind of the picture of earnings, and let me pull it up here. I'm just going to go to Estimize. Here we go. You can kind of see what it looks like here, but you can see the earnings per share. Okay, they beat estimates, and on a year-over-year basis, they're higher. They beat the estimates, and this was something that wasn't expected to have year-over-year growth. 133 was the actual last a year ago. Earnings of 133 a share. This year they came in at 141. So they showed growth that wasn't expected, and also beat the consensus here with that on the earnings per share. On the revenue side, they beat last year, in terms of revenue, but pretty much in line with consensus here. So, it's a very solid report here from Walmart. It is a company who, if you look at the overall revenue trends, yes, there's some volatility quarter over quarter, right? Next quarter the revenue is not going to be nearly as good. But it's expected to be significantly greater than the same quarter of the prior year. And you can see that, these comparisons and the expectations are for quarter over quarter, year over year revenue growth to continue at a very steady pace for Walmart, and that's a big positive for them. That it's an absolute monster positive here for them. And this is a company, this is a stock. They will have a pullback, and when the pullback comes, it will be sharp. It will be wow. But it will ultimately get bought back up, and this is a stock that we could be talking about valuations justifying somewhere into that kind of 115 to 125 area, when it comes to Walmart. And some of their drops, some of their downs that they've had have been concerns on them spending, right? The Jet.com deal and other things like that, where Walmart, they're spending too much. But now that spending is turning into added revenue and added earnings, and that tends to be a pretty strong phase for a company that lasts many quarters into the future. But you can see the weekly chart on here. This is this is one that kind of screams ultimately breakout coming. But is there going to be a little short-term resistance? I think you have to account for that potential with it, but ultimately just a really solid report. And it's helping stocks like Baba, it's helping stocks like Amazon to get a lift in them here today. So we see that from Walmart, kind of the anti-HSBC, in terms of, kind of what's going on and what is happening there. Okay. Alrighty. Now, I for the challenge, I have a position with XLY. I'm hitting my tolerance. I'm hitting my risk tolerance here with it, and I do have an order to go. I thought I might just jump out of it while I'm on video here, just because I've been asked whether I'm trading these live, and the answer is absolutely yes, I am. Live money, live account. This is there's no paper money here, but with the XLY where it is right here, man, I really would like to give it to the end of the day. Really would like to give it to the end of the day. It just, yeah. So I'm probably just going to wait a little bit longer. It's not one that I look at this morning and go, oh, well, this is absolutely going to reverse. But it's one that I look at and I go, man, if it does reverse, there's a long way to go. And so I'd like to give it that shot here, but it is one that I'll have to pop on out to, if I really want to jump into an Alcoa or really want to jump into an American, or even one of the banks. Now, my biggest concern with the banks is the fact that they're just in this consolidation. You see what the Bollinger Bands are doing, just screams consolidation here. And, I think Bank of America has a decent chance of being played up to around 30. I just kind of look and just seems like that's where they want to push Bank of America. So been looking at, do I want to play that? And I may look to play that, using today's pullback, here as an opportunity, because let's face it, the HSBC earnings have zero to do with what's going on with Bank of America, and we've already seen, everything going on with Bank of America. But I do need to see Bank of America recapture its 7-hour moving average in order for me to become interested in getting involved there with it. All right. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.